Siddharth Bothra of Motilal Oswal AMC is joining us right now on the show. Siddharth, great to chat with you. Looks like there's so much of activity. The risk on appetite seems to be coming back into the market. What are you advising clients?
Yeah, thanks. Good afternoon. Thanks for having me. Definitely, I think what we've seen that market was very narrow for the last 2-3 months, where most of the interest was only in a very select set of stocks. What we've been seeing post that is that markets broadening, as the some of the data is also coming a bit positive. The market breadth is improving, which I think is a big positive. And the opportunities, other than the very select narrow band which had been moving up, where valuations have turned very attractive for some of the companies, even on a cyclical basis. Some of the companies, are poised for a good recovery. So I would guess the opportunities size is increasing, and it's in a way positive for the investors that way.
Any of these banks in a different light now, say, talk about Yes Bank on the fund infusion, talk about SBI on the commentary that they have come out with for the second half of the year, and some of the other smaller PSU banks that have reported numbers, and private sector banks. Dhanlakshmi Bank, for example, one that reported today, said that it is looking like things are picking up, and they've not reported a really bad quarter. Do you see things changing materially now, particularly from the financial space?
So I think two things are happening here. One is, I think the pessimism was way overdone. If you look at the market commentary, some of the narrative which was going around had become just too pessimistic. So one is just the fact that maybe we had just turned too pessimistic on some of these companies, banks. And the other is definitely the results that some of the banks have given. Also the developments in some of the banks, say very recently. That's very positive for the overall economy as such, takes off the system risk substantially. So to that extent, it's positive. And especially for financials and all, I think you should stick with because these are levered plays. You need to be playing. You need to stick with very quality names. Which will probably do well on a entire cycle basis. So one needs to be still selective on financials. But I think one positive thing is that the system risk seems to have come down, and all these are definitely positive for the entire economy.
So that, what's your sense with regards to, what happens to this group of companies?
In this case, it all depends on, it's not so much to do with the operating companies themselves. It's more to do with the leverage positions that the promoters have, and some of the other things. So I think as that thing gets resolved, things should improve, because particularly for the flagship ones on the operating front, there's apparently the companies are doing fairly good. So one has to watch out as to what's happening on the leverage side, what's happening on the as things get sorted out on that side. Or if you see some major change on the management side in some of these, those are the things to watch out for these companies, I think.
Siddharth, of course, the gains that one has seen in the last 4 to 5 sessions, that's also changed the mood in the market. The sentiment has been boosted on account of various reports, coming about whether government could now be looking at realigning taxes for the capital markets as well. Of course, there is no confirmation around the same, but let's say Sensex touched all-time high levels. If we were to scale higher, even from the current levels, which are the pockets, according to you, that will contribute to those gains?
So you're essentially asking which sectors you think will do well from here on?
Yes, Siddharth.
Yeah, so I think market as such, while market has moved up, and some of the recent data has turned a bit positive, I think there's still a lot of uncertainty around, and we're not seeing any major complete reversal trends or affirmations being there. So in this kind of a scenario, you need to be still very, bottom up kind of an approach. And, you can't take, entire market or full sector kind of a view, because let's take the case of, say, BFSI. Even though the sector's been completely mixed in the last 2-3 years, there's been companies, which have done unprecedentedly well, and there's been a lot of wealth destruction also by. So I think same trend should continue in the near term till we see some, confirmed data, or some kind of a confirmation which would suggest that the economy is turned around. And till then, some of the sectors are continuously doing well, which is, say, take the case of insurance, because there's so much of under penetration there. Even if you look at the organized retail, I think even in the worst of time, they've been doing well because the under penetration is huge. So there are very few select sectors as such which are doing very well. Other than that, you have to be just very selective and do a bottom-up approach and pick up stocks. So even if you have sectors which are doing very badly, you may find one or two other industry leaders within that who are doing very well. Like take the case of, say, infrastructure, or even on the logistics side. So while the overall sector is struggling, if you look at the market leaders there, or if you look at some of the key players there, they are continuously becoming stronger. And so that's just one example on how, as an investment approach, we are still in a market where it's more a bottom-up fundamental stock-by-stock picking market, rather than a market where you can take across the market or sector-wise view.